Bloomberg strategist says Bitcoin set to replace gold. Bitcoin is gaining in popularity and value. Cryptocurrencies, on the other hand, might be viewed as an addition to gold rather than a replacement. In today's video, we are going to talk about if Bitcoin is set to replace gold, as a Bloomberg strategist says. So, if you are investing in Bitcoin or are planning to do it, then make sure you watch this video until the end, because it will be very interesting. Hello crypto lovers, welcome back to our number crunching ritual on your favorite channel, Crypto Stats, the channel that brings you daily news about crypto. If you don't want to miss things, make sure you hit the subscribe button and turn on the notifications. You can join our $25 giveaway by following the next steps. Step 1. Like the video and subscribe to the channel. Step 2. Leave a comment about your favorite coin name. Step 3. Watch the video until the end. Let's start with the current price of Bitcoin. It was around $44,860.40 USD this week. I believe that the year 2021 will be remembered as the year when Bitcoin began to permeate the mainstream financial world, with a growing number of global financial institutions, significant technology companies, and even a country adopting the crypto king. So let's get back to the video's major point. Is he correct in his prediction that Bitcoin would eventually replace gold? This is the truth. On the 50th anniversary of Bretton Woods, a Bloomberg strategist predicts that Bitcoin will supplant gold. Bitcoin, or BTC, is displacing gold, according to Bloomberg Intelligence's McGlone on August 16th. The top commodity market strategist attributed the Bitcoin market's better growth to the digitization of money and finance, noting that the same elements helped the US currency acquire dominance rapidly and organically over gold. Since August 2011, spot gold has lost more than 99% of its value against Bitcoin. McGlone's remarks came out of a recent 3-day meeting at the Bretton Woods Hotel in New Hampshire. In 1944, Bretton Woods hosted the United Nations Monetary and Financial Conference, which resulted in the United States, Canada, Western European countries, Australia, and Japan tying their currencies to gold. The new monetary system was dubbed the Bretton Woods system as a result of this. Richard Nixon, the 37th President of the United States, removed the dollar from the gold standard on August 15, 1971. Many economists applauded the decision, citing John Maynard Keynes's famous remark that the gold standard was a barbaric relic. The recent Bretton Woods The Realignment Conference paid metaphorical homage to the Bretton Woods system's demise, while focusing on rising financial assets such as Bitcoin, which are threatening to displace the dollar hegemony as the next global reserve asset. As a result, Bitcoin immediately attacked gold's status as a traditional competitor to the dollar, which is already occurring, as McGlone remarked. 5 decades of dollar dominance. In 1971, the so-called Nixon shock caused double-digit inflation in the United States, causing the dollar to collapse by more than 50% versus the Japanese yen and German Deutschmark. In the quest for global flat hegemony, however, neither currency could replace the greenback. Following the termination of the Bretton Woods Agreement, the Japanese yen has performed well versus the US dollar. In the early 1980s, the dollar had strong comeback rallies. During the dot-com boom and bust in the second half of the 1990s, it saw comparable gains. The dollar also escaped the 2008 financial crisis and the COVID-19-led economic downturn unscathed. Dollar shock ahead? Liberalized capital markets, which are fueled by a surge in the eurodollar and petrodollar markets, increase the dollar's worldwide utility, compelling foreign central banks to use it to settle international deals. Third, the US government's ability to impose financial sanctions on countries that disobeyed the White House's policies, particularly in the aftermath of the September 11, 2001 World Trade Center attacks, made the dollar a financial weapon. However, following the COVID-19 incident, James pointed out that the dollar has been under unprecedented economic difficulties. the U.S. deficit has climbed to 13.4% of GDP in the last 18 months, the highest level since World War II ended. It expects to increase following the Senate's recent passage of a $1 trillion infrastructure measure. According to the Congressional Budget Office, the stimulus will add another $256 billion to the budget deficit over the next 10 years. As a currency alternative, Bitcoin competes with gold. The Federal Reserve's loose monetary policies have resulted in supersonic price rises in the Bitcoin market, to the point where the strong moves to the upside have outpaced the strong swings to the downside. Pomp Investments partner Anthony Pompliano, a longtime advocate of Bitcoin, said in a note to clients that if one holds their wealth in dollars, bonds, or gold, their investments will yield negative real rates of return. Should you buy gold or Bitcoin? For hundreds of years, gold has dominated the safe haven asset arena, while Bitcoin was launched just over a decade ago and has only achieved widespread recognition in the last few years. Let's compare the two. 1. Transparency, safety, legality. The trading, weighing, and tracking system for gold is flawless. It's quite difficult to steal it, pass off counterfeit gold, or otherwise taint it. Bitcoin is also difficult to tamper with because of its encrypted, decentralized system and intricate algorithms, but the infrastructure to assure its security has yet to be established. The Mt. Gox fiasco is a fantastic example of why Bitcoin investors should be cautious. A popular exchange went offline as a result of this disruptive occurrence, and around $460 million in customer Bitcoins disappeared. The legal repercussions of the Mt. Gox incident were still being worked out many years later. As Bitcoin is a virtual currency, there are few legal ramifications for such action. Many years later, the legal ramifications of the Mt. Gox situation is still being resolved. Legally, there are few consequences for such behavior, as Bitcoin remains difficult to track with any level of efficiency. 2. Rarity. Gold and Bitcoin are both scarce commodities. Due to the halving of Bitcoin's mining incentive, all 21 million Bitcoin will be in circulation by 2140. While we know there are only 21 million Bitcoins in existence, no one knows when the world's gold will be mined. There is also conjecture that gold can be harvested from asteroids, with certain corporations expressing interest in doing so in the future. 3. Baseline value. Gold has long been utilized in a variety of applications, ranging from high-end jewelry to specialized uses in dentistry, electronics, and other fields. Bitcoin has significant baseline value, in addition to ushering in a new focus on blockchain technology. Throughout the world, billions of people lack access to financial infrastructure and traditional forms of credit. These people can transmit money throughout the world for virtually no cost using Bitcoin. Bitcoin's actual potential as a form of banking for those who do not have access to traditional banks has yet to be realized. 4. Liquidity. Gold and Bitcoin both have very liquid exchange markets where fiat money may be swapped for them. 5. The degree of turbulence. The volatility of Bitcoin is one of the biggest concerns for investors searching for a safe haven asset. For proof, look no further than Bitcoin's price history over the last 2 years. Bitcoin achieved a peak price of over $20,000 per coin around the beginning of 2018. One Bitcoin cost roughly $4,000 a year later. It has now recouped some of those losses, but it is still well below its previous peak. Apart from overall volatility, Bitcoin has shown itself to be vulnerable to market whims and news in the past. News from the digital currency realm could motivate investors to make hasty judgments, propelling the price of Bitcoin upward or lower swiftly, especially since the cryptocurrency boom swept up a number of digital currencies to record high levels around the end of 2017. For the reasons stated above, gold does not have this volatility, making it a potentially safer investment. Do you have any cryptocurrency holdings? Let us know which coin you invested in the comments section below. Meanwhile, I hope you enjoyed this video. If you haven't already, please subscribe to the channel and give it a like if you liked it. We hope to see you soon on Crypto Stats. This video's content is intended to be educational primarily and should not be construed as financial advice. Before making any investing decisions, make sure to do your homework and check with your financial advisor.